Hi, everyone. Welcome. It's just after 7 p.m., so we'll get started. My name is Lauren Patterson. I serve as the president and CEO of the New Canaan Community Foundation. I'm welcoming you tonight on behalf of our co-hosts of this series entitled The Start of Change, Addressing Racism. Our co-hosts are the New Canaan Library, the New Canaan Museum and Historical Society, the Interfaith Council of New Canaan, Grace Farms Foundation, and the Be Kind Foundation. And we're really pleased that we're together tonight and in this effort with more than a dozen other local nonprofit organizations also supporting this important conversation. As many of you know who've joined our previous two sessions, this is the third in a series of 6 speakers designed to really help us understand the history, policies, experiences, and different insights that can inform our national and local conversation on the topics of race and racism. But it's important to note that this is just the start of the conversation. And so we're really intending that this speaker series helps to inform us all, build a shared knowledge and connection to some of these issues. And then as a community, we can move forward and decide, what does this mean for me, my organization, my school, my faith community, the civic group that I'm part of. And I think without further ado, I'll hand it over to my colleague Kayla from the library to introduce our speaker tonight.
Thank you, Lauren. Welcome, everyone, and good evening. My name is Kayla Del Biondo. I'm the coordinator of adult programs and outreach at New Canaan Library. And on behalf of the library, I want to thank our partners for their contributions and assistance on the important programming series that's before us tonight. Our speaker this evening, Dr. Justene Hill Edwards, is a scholar of African American history, specializing in history of slavery in the United States. She is currently an assistant professor of history at the University of Virginia, and Professor Edwards received her doctorate in history from Princeton University in 2015. Professor Edwards also holds an MA in African New World Studies from Florida International University and a BA in Spanish from Swarthmore College. Professor Edwards' first book, Unfree Markets, The Slaves' Economy and the Rise of Capitalism in South Carolina, will be released in April 2021 by Columbia University Press. This evening, Professor Edwards will discuss race, wealth, and economic inequality in America. Thank you for being with us this evening, Professor Edwards, and I'll turn it over to you.
Thank you so much, Kayla and Lauren, for the introductions. First, I want to thank the New Canaan community for your very welcoming comments and feedback on my first talk. And since my last talk, I've had the opportunity to correspond with a handful of attendees, and I really enjoyed having the opportunity to interact with you. So my topic for the talk this evening is going to be a bit different than the topic for my last talk. It is in many ways much broader and perhaps a more presentist conversation about the history of race, of wealth, of economic inequality in America. So I'm going to provide a brief overview, and again, this is very brief, and I'll discuss how the history of both race and economic inequality have evolved in America. Economic racism, or economic white supremacy, as the historian Calvin Schermerhorn claims, is entrenched in American society, and it's institutional. And so tonight, I'm going to talk about this history and talk about the ways in which race and economic inequality are so intertwined, so tethered to one another. And we can look at this history to get a better understanding of the current moment that we are in today. So, okay. I'm wondering if Kayla or Lauren can allow me to screen share. Okay, let's see. There we go. Okay, perfect. Okay, so I want to start with a few statistics. According to a December 2014 analysis conducted by the Pew Research Center, the median wealth of white households was 13 times the median wealth of Black households, and compared with 8 times the wealth in 2010. And so again, the median wealth of white households in 2014 analysis was 13 times the median wealth of Black households in 2013, and that was compared to 8 times the wealth in 2010. And in 2013, the net worth of white Americans was approximately $141,000, while the net worth of Black Americans was $11,000. And these two charts show a similar picture. In 2013, white households held on average $656,000 in wealth, nearly 7 times that of Latino households at $98,000, and about 8 times as much as Black households at $85,000. And the Great Recession disproportionately affected Black and Hispanic households. All of this data is important, and hopefully it is thought-provoking as well. But if we look back on American history, then we find not only clues, but real markers that explain why the landscape of economic and racial inequality are as we see them today. It may be easy to believe that these wealth disparities along racial lines were merely an effect of the Great Recession. But in fact, this was generations or perhaps centuries even in the making. And here's the shocking but important part, that much of this was systemic, meaning it was systematic, and supported, if not outright advocated by the federal government. So this evening, I'm going to discuss the twin effects of both racial violence and government-sponsored initiatives aimed at blocking African Americans, primarily from reaping the benefits of their investments in the American dream. All right, so let's go to a brief timeline. In this talk today, instead of talking about the history of wealth and economic inequality along racial lines, from a 20th century perspective, we really have to go back and start in the 17th century, perhaps in the first moment, the first arrival of African slaves to Jamestown in 1619. And so from there, we're going to jump to 1865 and think about this moment of emancipation. And then we will shift to 1874, a moment in Reconstruction that I'll talk about in a minute. And then we'll transition into the 20th century, talking about housing policies that disproportionately affected African Americans and really proved to be a hindrance to building wealth, especially through home ownership in America. And so let's talk about slavery, one of my favorite topics in terms of really understanding this broader history of economic inequality in America. Now, one idea that I want to kind of drive home is that enslaved people did know about money, they knew about trade, they knew about the idea of wealth. Though they did not have the sophisticated knowledge of economics, and though the majority of enslaved men and women did not know how to count, they understood that their labor was valuable, that the goods that they produced were desired, and that their bodies were literal vehicles of capital and wealth for slaveholders. All of this is to say that they knew about trade and they knew about market activity. But having money, and this is the focus of my forthcoming book on free markets, having money did not mean that enslaved women and men had real economic power or what they really desired, which was freedom. Though it meant that they could make their lives just a little bit better through economic enterprise and ingenuity, few could transform their investments in their own economic activities, in their own trading activities, into what they really wanted, which was their freedom, their own emancipation. Instead, their hard work and dedication to economic enterprise, even on a small scale, benefited their enslavers, the men and women who owned them. And these enslavers increasingly sought to profit from their investments in both slavery and slave labor. So it was not uncommon in cities such as Charleston and Savannah and New Orleans for enslaved people to find ways to make money for themselves and to do so very publicly. But unfortunately, again, these investments in economic enterprise, even on a small scale, did not always and really rarely translated into freedom. And I love this picture because this is a picture called Selling Sweet Potatoes in Charleston, and it is of a group of enslaved women vendors kind of selling their goods to whomever would purchase them. And this is the type of economic activity that enslaved men and women participated in, really throughout the period of legal slavery in America. So enslavers, particularly in the 19th century, sought to use all the tools at their disposal to profit from slavery. They used enslaved people first and foremost as capital. Movable capital is what enslavers, what slave traders, and what investors understood enslaved men and women to be. So they saw enslaved people as movable units of capital. And they invested heavily in the technologies of slavery. So slaveholding capitalists, especially again in the 19th century, sold bonds to fund state chartered banks from which they received loans. They used their slaves and their land as collateral in the process. These bonds were secured by individual states that chartered the banks. Entire industries emerged in relationship to slavery and really the labor of enslaved men and women. From finance to insurance, slaveholders purchased policies to actually protect their investments in slaves and slave labor. The marketplace for slave insurance, especially in the 1840s and 1850s, was hot. It was a red hot industry. From the Nautilus Mutual Life Company, which is what you see here, which is now known as New York Life Insurance, to Lloyd's of London. The insuring of enslaved people was a visible and important aspect of America's financial services landscape in the 19th century, with enslaved people's lives, again, and their bodies holding vast amounts of capital for investors and for enslavers. One historian claims that on the eve of the Civil War, the value of the almost 4 million enslaved people in the US amounted to approximately $3.5 billion, and that's billion. And enslaved people were the biggest financial asset in the US in 1860. So the outbreak of the Civil War was a major rupture, not just for the American economy, but for the millions of African Americans who could finally own themselves, own their bodies, and ultimately own their labor. And there was great potential during the Civil War. Formerly enslaved men and women understood very realistically what held in the balance. One of the most promising events, in addition to the Emancipation Proclamation of 1863, occurred 4 months before the end of the war. And so on January 16th, 1865, Union General William T. Sherman issued Special Field Order Number 15, which allocated a 30-mile strip of land, and I have a map of that next, from Charleston, South Carolina to St. John's, Florida, quote, for the settlement of the Negroes now made free by the acts of war and the proclamation of the President of the United States, who at the time was Lincoln. This order had the potential to shift approximately 400,000 acres of land formerly owned by Confederate slaveholders and shift that land to former slaves. The land was divided into 48-acre parcels, which is where the idea of 48 acres in a mule comes from. And these parcels were to be distributed to African American families. Almost immediately, former slaves in South Carolina and Georgia in particular flooded these coastal regions of these two states, wanting to claim land for themselves and for their families. And so you have this 240-mile strip of former Confederate land from South Carolina to northern Florida that Sherman wanted to essentially parcel out for recently emancipated slaves. And this, again, had the promise of shifting land formerly worked by slaves to recently emancipated African Americans, giving them a leg up in this process of emancipation. However, Field Order number 15 and really African Americans' ownership of the land was short-lived. By July 1865, months after Lincoln's assassination, President Andrew Johnson returned Sherman's directive, returning the land to its former Confederate owners. And when Johnson rescinded Special Field Order number 15, he essentially destroyed the potential economic boost to African Americans who enriched enslavers' wealth. A potential step up, if you will, economically was taken away from recently emancipated African Americans. So former slaves essentially entered this period of freedom, this period of emancipation with nothing. No capital, no assets, no money, and certainly no land. And so Reconstruction, again, was a time of intense potential promise for African Americans, for the recently emancipated. They reunited with their families, they formalized their marriages, they controlled their labor in any way that they could, in terms of for whom they would work and the type of work that they would accept. Some African American women actually decided to remove themselves entirely from the labor marketplace, instead choosing to take care of their families and not work outside the home. And African Americans actually made strides politically as well. 2 African American men were elected to the Senate from Mississippi, the first Hiram Revels from Mississippi. He was elected in 1870, and the second, Blanche K. Bruce, was elected to the Senate in 1874. Now, interestingly enough, the next African American senator to serve in the Senate would be in 1967, with the election of Edward Brooke, who represented Massachusetts. And so if we compare the 20th century political landscape to what we witnessed in Reconstruction, we see this kind of massive promise in terms of economic and political advantages that African Americans attempted to claim for themselves. One of the other economic advantages that African Americans attempted to claim for themselves was through the Freedmen's Bank. And this is one of the kind of more fascinating examples of kind of the federal government working with African Americans on this idea of economic enterprise and promise. And so chartered in March 1865, the Freedmen's Bank was supposed to be a savings bank to bring former slaves into the capitalist fold, to introduce former slaves to ideas of thrift and ideas of capitalism. By 1872, the bank had grown quite rapidly in the 7-year period. There were 37 branches in 17 states, from Mobile, Alabama, to Richmond, Virginia, and Baltimore, and Philadelphia, Pennsylvania. Even Black universities such as Howard University held accounts with the bank. The Freedmen's Bank grew in this short period of time to about 70,000 depositors, most of whom were African Americans, with deposits totaling more than $57 million. And so we see this financial institution created by the federal government for African Americans, especially for recently enslaved, recently emancipated African Americans, being not just popular, but representing something important for the recently emancipated. But after 5 years of growth and prosperity, however, bank administrators, who were comprised primarily of white investors from New England, sought to essentially revise the bank's mission. It was originally chartered as just a savings bank, but Congress revised the charter in 1871, allowing trustees to expand the bank's business enterprises to include the riskier side of financial services, and that was mortgages and business loans. But unfortunately, most of those loans did not go to African Americans and certainly did not go to bank depositors. Instead, the trustees used the bank to essentially fund their own economic ventures, leveraging the deposits of the tens of thousands of African American customers to their own high-risk investments. And this move ultimately precipitated the bank's demise. The trustees, as kind of a final move to save the bank, actually persuaded Frederick Douglass, himself a depositor, to not only make a $10,000 donation to the bank, but they asked him to take the helm of the bank, to manage the bank in March 1873. But Douglass could not bring stability to what at that point was a crumbling institution. Without oversight from a federal regulator, combined with instability in the American economy with the Panic of 1873, the depositors began withdrawing their money en masse, and the bank could not survive. And so in June 1874, the trustees essentially closed the bank. And so not only did this bank have a kind of dramatic rise, but a disastrous end, but it devastated a generation of African Americans who were not only struggling to find economic stability, but were struggling with their trust of the federal government at this point as well. But this period of Reconstruction, and really at the end of the 19th century, African Americans did attempt to find ways to create their own financial opportunities for themselves. African Americans in the two generations after the Civil War created institutions for themselves to help members of their communities weather the unpredictability of freedom. In Richmond, Virginia, for example, Maggie Lena Walker, who is in this picture that you see here, founded St. Luke's Penny Savings Bank. And this is what she said about her economic vision. She said this: first, we need a savings bank. Let us put our monies together. Let us use our monies. Let us put our money out of usury among ourselves and reap the benefit ourselves. Let us have a bank that will take the nickels and turn them into dollars. And so historian Shanette Garrett Scott has explored the history of this bank most recently in her book, Banking on Freedom. And she contends that with the bank and with African American women in particular at the helm, this institution helped working class African Americans survive the economic challenges at the end of the 19th century and really into the 20th century as well, and even through the Great Depression. But the promise and the ultimate failure of Reconstruction and the period after Reconstruction was overshadowed by racial violence against African Americans, and the violence that occurred in tandem with a system essentially created to take the place of slave labor, especially in the slave South, begins to rise. And this was the rise of convict leasing and really the beginning of America's carceral system. We do have a quick question that I will take a detour for. Was the Freedmen's Bank considered part of the Freedmen's Bureau? Yes, the Freedmen's Bank was kind of created out of the Freedmen's Bureau, and the Freedmen's Bureau, and I can talk a little bit more about this in the Q&A, the Freedmen's Bureau was created by the Union to kind of help formerly enslaved African Americans out of slavery. Okay. So we have the rise of convict leasing, and what many scholars now believe is the kind of the steady rise of mass incarceration in America. And so again, recently scholars have been really re-examining the history of incarceration in America and connecting it to systems of forced bondage and really to systems of slavery, the institutions of slavery. Historians such as Douglas Blackman, Sarah Haley, and Talitha LaFloria have explored the relationship between slavery and convict leasing in particular. From Florida to Texas, convict leasing in many ways replaced slavery as a dominant labor system based on coercion and exploitation. And again, African Americans were driven into convict labor camps to fulfill the needs of states, the needs of private companies, and the labor needs of private citizens. After the Civil War, and in particular after the passage of the 13th Amendment, which abolished slavery except as a punishment for crimes, and we'll get to this in a minute, states started passing Black codes. And these laws only applied to African Americans, and they included laws against vagrancy, which was what they would call extreme poverty or homelessness, loitering, or breaking curfew. And so these Black codes were created to essentially funnel Black labor into the convict leasing system. And the punishment for these crimes, again, was imprisonment. And prisoners could be leased to employers for a profit. And so let's just take a minute to look back at the 13th Amendment. It was ratified in December of 1865. And so this is the amendment that officially ends slavery. It says neither slavery nor involuntary servitude, except as a punishment for crime whereof the party shall have been duly convicted, shall exist in the United States or any place subject to its jurisdiction. And so now scholars are starting to rethink what this means and whether we can actually say that there was an end to legal slavery in America. And so with the proliferation of convict leasing, there were thousands of enslaved men and women who were, again, funneled into convict leasing. One scholar believes that almost in one state, I believe it was Mississippi, about 25% of of men and women who were funneled into convict leasing actually died from this labor. And so it was an incredibly violent form of coerced labor. And you have an entire generation of African-American women and men swept up in a system that continued to profit off of their labor, and for some, profit off of their lives. And so the rise and fall of convict leasing in the late 19th and early 20th century, and convict leasing kind of came to an end by World War II, as there was a popular outcry against the practice. But as the rise and fall of convict leasing continued in the late 19th and early 20th centuries, this is a time when historians call this period the nadir of race relations, and so the lowest point of race relations. And you see racial violence, in particular against African Americans, growing in this period, especially in the early 20th century. And in some regions of the United States, white fear of economically mobile African Americans manifested in extremely violent ways. All of this is to say that as we move into the 20th century, instances of racial violence did not go away. If anything, they increased. The most prevalent example, and one that has rightfully received a lot more attention in the past years, perhaps because of the HBO show Watchmen, that focuses on Tulsa. One of the most violent instances of economic and racial violence occurred in Tulsa's Greenwood neighborhood, and it is called the Tulsa Greenwood Massacre. African-American residents used their segregated status in Tulsa to their advantage. The Greenwood neighborhood in Tulsa boasted over 300 Black-owned businesses that served primarily African-American patrons. And this neighborhood essentially serviced the Black community. The violence that occurred in the end of May and the beginning of June in 1921 actually began with an encounter between a young 19-year-old African-American man named Dick Rowland and a 17-year-old white young woman named Sarah Page. Though the historical record is unclear about what transpired between them, if anything, we do know that Rowland, the African-American man, did enter the Drexel building on Monday, May 30th, 1921, in downtown Tulsa, where he worked on the ground floor as a shoe shiner. He took the elevator in the Drexel building to the top of the building to use the bathroom. He left the bathroom and entered the elevator where Page was working as an elevator operator. When the elevator reached the ground floor, observers heard Page scream. As historian Alfred Brophy discussed in his book on the Tulsa riots, a newspaper article appeared in the Tulsa Tribune the following day, which labeled Rowland a sexual predator. Rowland was thereby quickly arrested and held in a Tulsa jail waiting arraignment. On May 31st, as white and Black Tulsans came to blows over Rowland's perceived actions and his fate, shocks rang out. The Black Tulsans retreated to Greenwood, only to be followed by whites. And on the following day, on June 1st, 1921, white Tulsans began to burn and loot Greenwood's businesses. Though at the time, reports say that about only 30 African Americans were killed, now scholars believe that that number was around 300 African Americans killed that night in the massacre. But with this violence, the big question is really how much capital and how much investment and how much economic promise did Black Tulsans lose in that one day of violence? How much economic promise was essentially lost? And so this question of economic promise, I think, lingers quite heavily in this conversation, checking my time, especially as we move into the 20th century and kind of think critically about not just kind of what's going on in these small towns and cities, but what is going on writ large in the nation, especially vis-a-vis in relationship to the role of the federal government. And so this question of economic promise and potential, again, is at the heart of African Americans' experiences in the 20th century, and in particular in the 1930s with the Great Depression. And as the nation struggled through the Great Depression, again in the early 1930s, the federal government and the then president, Franklin Roosevelt, figured out how to reestablish a sense of social and economic stability amidst the turmoil wrought by economic instability. And so this included the creation of federal agencies through the New Deal, whose goal was to stabilize American society and in particular stabilize the American economy. And so the Great Depression hit Americans hard. Financially, though, African Americans experienced really the brunt of the economic struggles. In some Black communities, unemployment reached about 50%. The Roosevelt administration, again, created New Deal programs aimed at helping Americans, and this began in 1933. In particular, Roosevelt signed the Social Security Act of 1935, and it created a social safety net for older Americans, the unemployed, and for economically disadvantaged Americans. And at the foundation of this act in particular was to pay financial benefits to retirees over the age of 55, based on supposedly working a lifetime and the payroll tax contributions from that work and that labor. But as African Americans, again, took the brunt of the financial hit during the Depression, they did not actually enjoy all of the benefits of the New Deal programs. In the first version of the Social Security Act, for example, 65% of African Americans were excluded because the initial program did not include agricultural workers or domestic workers. And those were the positions that many African Americans, especially in the South, did. That was the kind of predominance of their labor. And so though African Americans did benefit from the Works Progress Administration, for example, where 350,000 African Americans were employed by this program, when it came to the building blocks of wealth in America, we're talking about home ownership in particular, African Americans were excluded in droves, which and we see this occur with the Federal Housing Act of 1934 and the creation of the FHA in 1935. And so if we talk about the real importance of property ownership, of home ownership in American society, and the federal government investing heavily in this beginning in the 1930s, then we see African Americans being excluded from these programs that provided essential building blocks for stability, for a middle class lifestyle, and really for wealth and intergenerational wealth in America. And we see African Americans being excluded from this. And so while the FHA was instrumental in alleviating the crisis of primarily homeownership in the 1930s and 1940s and 1950s, it left predominantly Black neighborhoods and African Americans blighted and segregated both racially and economically. I'm checking my time here at the time. This is a map that you see of New Canaan. There is a great website, it's called Mapping Inequality, and it's fun to kind of tool around there to get a sense of what these red line maps look like. I've done this with students in one of my classes, and they find it really fascinating to look at these maps, consider the history and the context, and look at their hometowns and get a sense of kind of the racial demographics of these cities in the 30s, 40s, and 50s. And so this is a map again of New Canaan. The green and the blue sections mean that the neighborhoods were considered quote unquote best and quote unquote still desirable for investment and for mortgage lending. And so essentially mortgages were going to white applicants in this neighborhood. And so what you see here and what I'm gesturing towards is this is redlining. And redlining was a practice of outlining areas with sizable African American populations in red ink on maps, just like this one. And these maps served as a warning to mortgage lenders, essentially, effectively isolating African Americans in regions that would suffer lower levels of investment than their white counterparts. And so this began with the National Housing Act again of 1934, and these red line maps really kind of reflect the racial makeup of these cities. Scholar Richard Rothstein, in his incredible book, The Color of Law, has claimed that the FHA made the goal of racial segregation clear because the FHA refused to insure mortgages in or near African American neighborhoods and communities. And so, interestingly enough, again, if you go to the website Mapping Inequality, it is a kind of fascinating study of how in many ways the federal government supported housing segregation at a pivotal moment in American history, where many white Americans were kind of getting the tools and the ladder towards the middle class, and African Americans were often denied these same tools to upward mobility. And so again, if you see this map of New Canaan, the green and the blue parts are considered a less risky investment for mortgage lenders. And so interestingly enough, if you look at the red line maps of Darien on the left and New Haven on the right, you start to see these neighborhoods in red, and these neighborhoods were predominantly African American neighborhoods. And so these maps were essentially a directive for mortgage lenders, helping them decide where to allow their applicants to invest. Okay, there we go. And so part of the New Deal program is again the expansion of home ownership, and the federal government were sponsoring, really importantly, these programs. And the GI Bill was one part of this expanded idea of the social safety net supported by the federal government. And even though, again, many New Deal programs were race neutral, the effects were race-based discrimination. The Veterans Administration, again, created under the GI Bill, and the GI Bill was created in 1944 after the end of World War II. The GI Bill, yes, applied to African American veterans, but African American veterans primarily were flocking to historically Black colleges and universities, HBCUs. But these colleges and universities were chronically underfunded, and had been underfunded really since the 19th century. And so these institutions really could not handle the influx of African American students seeking to use their benefits to expand their education. And so in the 1950s and the 1960s, the civil rights movement really brought this conversation, this discourse about racial violence, about racial justice and discrimination to a national audience in a way that had not been seen previously. Civil rights leaders began to highlight issues such as redlining and discrimination, especially in terms of federal housing policies. And as a result, the federal government actually ended redlining practices in the late 1960s. But that does not mean that residential housing discrimination in particular did end, because it didn't. These practices, in what the historian Keeanga-Yamahtta Taylor calls predatory inclusion, benefited financial institutions in the real estate industry to the detriment of communities of color. And so while you have a period of time of kind of exclusion, in the 60s and 70s, you have financial institutions finding ways to extend credit, but extending subprime credit to African-American borrowers. And this begins another phase in the kind of a federal government's role in some way in protecting these financial institutions when they're engaging in some predatory practices. So while African Americans were at first excluded from the mortgage market, for example, financial institutions figured out how to bring them into the fold through extending qualified African American applicants from accessing prime mortgage rates and instead shifting them into subprime mortgages, thereby stripping them of potential equity that they could accumulate in their homes. And so in the 1990s and early 2000s, African Americans and Latinx borrowers were systematically, again, denied prime mortgages. And studies have shown that minority borrowers were more likely to obtain high-risk mortgages as well. And as we have talked about, and as I've just discussed, in many ways, this is not new. And this is a kind of historical trend of kind of systemic and institutional discrimination that is so embedded in the building blocks of kind of financial security in America. And so in many ways, the fight for racial justice in America, both historically and now, is not just about racial justice, but it is about economic justice as well. And if we look at this history, the struggle for racial justice has in many ways, again, been a struggle for the basic building blocks of stability and prosperity in America. And the influence, again, of economic white supremacy has been indelible on Black and Brown communities in America. And so kind of coming back around to the Great Recession, again, I think it's important to say that home ownership and ownership of property in oneself as property, even ownership of oneself and one's family, has been an essential facet and an essential part of prosperity in America. And unfortunately, African Americans and Latinos in particular have been disadvantaged in this respect. And so in conclusion, this history is complicated, complex, and fraught. And yesterday, the Federal Reserve just published findings saying that over the past 4 years, and so since 2016, the racial wealth gap has not changed, and that the median wealth of white families is $188,000, while the median wealth of Black families was just $14,000. And so considering this history of race and economic inequality in this country, perhaps this finding isn't too surprising, even though perhaps it should be. And so with that, I will stop there, a quick 45 minutes, and I look forward to your questions. I see we have a few in the queue.
Great, thanks, Justine. So you can use the Q&A button at the bottom of your screen to ask the questions. But the first one came in earlier when you were talking about the Freedman's Bank and then the Freedman's Bureau. And when there was a question about if the bank was considered part of the Bureau or how that worked, if there was anything else you wanted to expand on in terms of the Bureau.
Well, I find the Freedman's Bank to be fascinating, and this period in American history and Reconstruction in particular to be just incredibly fascinating. But the Freedman's Bank was kind of a part of the Freedmen's Bureau, but it did stand a bit apart. And so the Freedmen's Bureau, again, was created to aid the country in coming out of the war. And so there were freedmen's agents sent to various parts of the South. And the Freedmen's Bank actually set up branches in major southern cities. And so you have Charleston, you have Savannah, New Orleans, Natchez, Mississippi. And so the bank would receive deposits, oftentimes not more than a couple cents, or even $1 or $2. But the records are fascinating because it shows us that that former slaves, that the formerly enslaved were excited about investing in this financial institution. They were excited about kind of building wealth as much as they could. And so it was a devastating moment when it collapsed because of financial mismanagement. And this is actually my next book project. I'm really wondering if we can use the history of the bank, this very short but tumultuous history, to understand this longer trajectory of African Americans' relationship to America's financial institutions, beginning at this really pivotal and delicate time in American history.
There's also a follow-on question about if there are any Black banks today.
I believe there are a handful of Black banks. But this I think is a really good question. Are Black banks the answer? And that is a question that I actually don't know. Perhaps, but financial inclusion is surely important. But I am kind of on the fence as to whether I think that that installing perhaps more Black banks in Black communities would be the answer. Perhaps. I could be convinced, but I'm not sure right now.
Are there other ideas about how white Americans can help close the wealth gap between races?
Ooh, that is a great question. I think a good start is participating in events like this to open up the conversation about the intersections of racial inequality and wealth inequality. I do think that perhaps pushing our public figures to support a bill that has been stalled in the House for I think about 3 decades to study reparations, and it's just a study. We have scholars, we have historians, we have economists, we have sociologists studying potential effects of reparations, and I think that doing so on an official level, kind of sponsored by Congress, would be a great next step, because it would show that our public officials are taking this question seriously, and I think it needs to be a serious conversation.
Mm-hmm. That's very timely. A question popped up when you were talking that said reparations ?
I figured.
There's a question about the Black codes and what remnants may still remain.
Oh, sure. Well, ideas of remnants are vagrancy laws in various iterations. And so the idea of loitering, for example, being a crime in certain cities and jurisdictions stem directly from Black codes. And those laws, especially loitering laws, tend to disproportionately affect Black and brown youth. Yeah, and so we see these vestiges. If we can go back even further, I find talking about slave patrols incredibly fascinating, because there is a way that, especially in the Carolinas and Virginia, starting really in the 17th and 18th centuries, whites who were empowered to patrol and police slaves, kind of stemming from this period of slavery, is really interesting as well. And so in many ways, Black codes are kind of just an extension of these laws and regulations designed to police slaves and slave communities.
There's a couple of questions that stem more on housing and housing policy. So I don't know if you can speak to kind of specific ways that African Americans were shut out of the FHA. There's also a question about the history of HUD and rental vouchers. If you can speak to any of those aspects.
What was the first question?
By what means were African Americans shut out of the FHA?
Well, they could not get FHA insured loans in neighborhoods that were redlined. And so if African Americans were segregated in terms of residences, in terms of where they could live, they could not find financial institutions who would lend to them, especially if those mortgages were not insured by the FHA. And so what it meant, it wasn't necessarily a direct connection, but it was kind of a roundabout connection to redlining and African American borrowers not being able to get even attractive loans in neighborhoods that they would want to live in. So it would effectively kind of shut them out of the mortgage market at a pivotal time, again, in American history in the mid-20th century.
Great. And I'll put a plug in quickly before we get to another question. The sixth session in our series on October 27th is specifically on housing, and it will be really specific to Connecticut, Fairfield County, and New Canaan with the Open Communities Alliance. Let me see if there's any other questions we've not gotten to. There's a good question that does also set us up for another one of our speakers, which is about the current status of prison labor.
Sure.
And, does the 13th Amendment still stand as it was originally written? Does it relate to the Black codes?
Mm-hmm. Well, I find this question about the 13th Amendment in particular to be really poignant and really fascinating, in that essentially if you read the amendment, then slavery has not really been abolished in the way that I hope most Americans would be comfortable with, right? It creates a loophole for those who were considered to be criminals. And so it then created essentially this market. This is kind of capitalism at work, right? It created a market for convict labor and convict leasing. And so I think that there is a really important conversation to be had, and scholars and historians are having this conversation about the real vestiges of slavery in American culture. And we see convict leasing and really the rise of mass incarceration being that linchpin in ways that hopefully most, if not all, Americans would feel uncomfortable with. And convict labor, prison labor is still used today in terms of certain types of manufacturing. And so it is interesting, again, the linkages between kind of modern institutions and slavery, because there is a direct connection.
Mm-hmm. And that's also a great plug. So our speaker in 2 weeks, so we have a break in our speaker series next week, but the following week, which I believe is October 13th, we have a speaker from the Vera Institute who's going to be speaking specifically on mass incarceration. So I'm sure we'll get into prison labor. There's a really good question in here about whether there are other areas of the country where there's less inequality in wealth between whites and Blacks, and if there are thoughts on what's contributed to that narrower wealth gap.
Ooh, interesting. So I do know that one of the wealthiest, predominantly African-American neighborhoods is north of DC in Maryland. I don't want to say Prince George's County, I think, or
Yep,
Prince William County. Yeah, and
yep.
that is, um, it is one of the, if not the wealthiest Black community in the nation. And so there is something to be said about African-American home ownership, African-American investment in one's community, and the power that is there, right? In terms of closing the wealth gap, which is a problem that, again, will continue to persist if we don't work strategically to figure out ways to close that gap.
Questions about policy changes that you feel like might be helpful, especially as folks are thinking about the political landscape.
Ooh, politics. Oh, I think that is another talk or another lecture, perhaps another discussion.
Are there resources for research or kind of policy papers that you turn to that you find are at least put out interesting?
Sure. So I have, so throughout the talk, I've tried to flag a few historians whose work I'm very, whose work I really appreciate and lend to my own understanding this topic. And so I would encourage you to read Richard Rothstein's The Color of Law. Keeanga-Yamahtta Taylor's book, Race for Profit, which is a finalist for the Pulitzer. Shanette Garrett Scott's book, Banking on Freedom, about Black women in finance before the New Deal. There are so many. And of course, my book that's coming out next year, On Free Markets, which is about the economic lives of enslaved men and women in South Carolina and challenging our understandings about the way that capitalism plays out in their lives. So there is an increasing literature on this topic, which is really exciting. It's an exciting space to be working in because it affords historians like me an opportunity to kind of get beyond the boundaries of our own work to speak to larger questions and topics that are at the top of a lot of Americans' minds today.
Mm-hmm. Great. And I'm seeing a number of either questions or messages in the chat. This is all being recorded. It'll be posted on the library's website so you can replay it, and we'll also make sure that a reading list is available and capture those names and titles for anyone who's interested.
Mm-hmm. Wonderful. And I do encourage your viewers to reach out to me via email. I've had the opportunity to correspond with a few people from my talk last time, and it was quite enjoyable. So
great. I don't see any other new and burning questions. So thank you, Professor Edwards, for joining us again tonight. Thank you to all our guests for joining us. And as I said, we are on a break next week, but the following week, October 13th, we hope you'll be back to join us for a discussion on mass incarceration. So thanks, everyone. Good night.